Thank you, Mr. Chairman. And to Mr. Mastromarco's opening comment about economists holding hands, I agree with some of what each of you said and disagree with some of what each of you said, so I guess I'm in that same camp. So I'll just start at this. I have a question or maybe a challenge, you might say, or something for each of you as we, and I'll see how far I can get in the 5 minutes. But Mr. Hanlon, first for you. You mentioned about repealing the Bush tax cuts for higher income individuals. Okay, let's assume we do that. Done. It's all done. That doesn't come close to closing the deficit. So are there other tax increases that you believe we ought to have, or what then, I guess is my question.
Sure. No, I agree. It's certainly a first step, and it's not the only thing. And I just in response to the questions before, I mean, there's no doubt we need to do things on both the spending and the revenue side. I mean, I'm not advocating for only raising taxes, and particularly healthcare. You know, we need to get healthcare costs system-wide under control. And so, but in terms of what else we can do to raise revenues beyond that, I think we do need to do that. I think the best way is to broaden the tax base and look at the tax expenditure budget, in particular tax expenditures that provide a greater benefit for high-income people, because of what's known as the upside-down effect. That people who pay high marginal rates benefit more from the various incentives that are in the tax code. And there's a proposal to, sorry.
Well, no, I guess what I'm getting at is, there's a lot of rhetoric around this town these days about taxes on high-income individuals, but even if you do that, it still isn't that big an amount of money relative to the problem. So I guess my question is, and you've said there ought to be some stuff on the spending side as well, I understand that. But I guess, let's say we do whatever for high income, raise the rate to whatever, or do whatever you think ought to be there. Do you also believe that as a part of this that there should be tax increases on or reductions in tax expenditures or whatever on people who are not high income or not?
So we have we developed a plan called it's called Budgeting for Growth and Prosperity, and it's basically it was the challenge to basically balance the budget over a 20-25 year time frame, and we tried to do that by avoiding tax increases on middle class people. I mean, I think one way, something we need is to put a price on carbon emissions, which solves two problems. I think you definitely want to protect low-income people from that, but that's another potential revenue source that can help.
But that'll hit
in the long term.
That obviously hits middle-class taxpayers.
Sure, it could, depending on how you structure it. Yeah.
Okay. All right, Mr. Mastromarco. Fair tax. One of the things, you didn't mention this argument. One of the arguments that a lot of fair tax people say is we can get rid of the IRS. There has to be a whole lot less enforcement, et cetera. My concern has always been, if you take, and I don't know what number of a fair tax you have, but I've heard 23% or something. Let's just take that. I'm from California. You add to our 10% sales tax, state sales tax. You now have a 33% effectively consumption tax. The incentive to avoid that tax and to take transactions and things underground would be enormous. And I've always thought that one of the problems with the fair tax is that it would be the opposite. You would actually need a much more intrusive enforcement mechanism than currently exists on the income tax. What's your thoughts on that?
Well, I really couldn't disagree more with that statement. And it's from somebody who has experience both as a tax practitioner and also has worked in tax enforcement.
And by the way, I'm a CPA and did tax returns for a living and have a master's of taxation. So
and we should be kindred spirits on that.
We should be. But like you said, we're joining hands and don't agree.
The tax gap. Well, but part of it is defining the problems. That's the beginning, and that's what the good thing about what this committee is doing is to ask the questions that lead to this. I mean, tax reform. The good news is tax reform is coming. The bad news is it's undefined. There's been a lot of good work that Ms. Olson has done and through various reports concerning what causes the tax gap, what causes this massive tax gap. Is it underreporting? Is it, what are the influences that deal with evasion? The first thing you have to understand, Congressman, is that the tax gap is really four different elements, right? Honest taxpayers, confused taxpayers, game players, and evaders. All right. Under the fair tax, when you're dealing with someone who's a game player or someone who's confused, you pretty much eliminate that. I mean, it devolves the 9,000 code sections into how much did you sell to consumers. That's a pretty basic, easy question. All right, so it divides the line between evaders and, you know, game players and those with excuses pretty well. All right, so then to look at evaders, what influences that? The number of taxpayers. They diminish by about 90%. I mean, 85% of the consumption taxes are paid by about 15% of the retailers. Right? The opportunities they have for evasion. In the code, I could drop it on the floor. You could too, and we could tell people how to, you know, how to avoid the taxes from that. This is a very simple plan. 3 marginal rates, and that's where you were focusing on, marginal rates. All right. Well, the marginal rates under the fair tax are the lowest of any conceivable plan that could be developed. The base is twice that taxable income, 23% as opposed to 15.3% payroll taxes under the current system, plus let's take a taxpayer at 28%, that's 43%. So if you're going to rob a bank, the question is, do you rob the one with gold or do you rob the one with iron ore?
Yeah, I think and the chairman's calling the end, so this will be a continuing discussion. But my concern is that you turn, it's like prohibition, you turn a lot of honest people into dishonest people because of the size of the benefit of becoming someone who doesn't pay taxes. But time's exposed. Time's over. Back to you, Mr.